Hello, active traders, and welcome to our special event tonight. Really excited to see over 1,000 of you registered for How to Trade Winning Breakouts and Pivots with myself, Ken Calhoun, and my longtime colleague, Steve Nison. Steve, it's great to have you here with us tonight.
Thanks, Ken. Good working with you again, as we've done many times in the past years, and really excited to work with you on this special webcast where we'll be making a special announcement in a little bit.
Yeah, we've got so much to offer, and I wanted to personally thank you because I've made so many winning trades thanks to using what I've learned from you over the last 14 years we worked together. So works in real money trades, so that's the proof. So I wanted to say thanks. I couldn't have made all the money I've made. I've done millions of dollars in trades over the last 18 years, and couldn't have done it without learning from you. So thanks so much for working with me on this. I appreciate it, and look forward to
right. And it's a great team. Yeah, we're a great team. I mean, your expertise at Intraday and Western Technicals, and mine, Candlesticks. So yeah, it's like a 1-2 punch for successful trading.
Yeah, we've got a really exciting session lined up for everybody tonight. I'm going to lead off for the first 20 minutes. Then Steve Nison will speak for 20 minutes, and then we'll speak together. So if you have any questions at all, feel free to ask. That's what we're here for. We've got a really exciting step-by-step strategy session tonight. As always, all information is for educational use only. No advice about buy-seller holds being provided. We're going to have a really fun Amazon gift certificate promotional giveaway tonight. So for the first 5 of you, I'll randomly pop up with a technical question and say, hey, name that candle pattern, or name where a entry signal would be on this chart based on something I just taught you. The first person to speak in each of the 5 times I will ask that will get a $10 Amazon gift certificate. So a really good way to encourage all of you to be here and stay with us through the end. We'll be doing those throughout tonight's webcast all the way for the next 59 minutes. So thanks so much for being here, everybody. For those of you who are Steve's traders who may not have heard of me, you may have seen me in this month's issue, just hot off the presses today, on gap reversals in stocks and commodities. I do a regular column now. I'm a regular columnist for stocks and commodities. The March on ADX breakouts. We're going to lead off with an ADX signal strategy tonight for you. Breakout or fake out in October. You may have seen me in Vegas at my seminars or in New York at the Money Show Expos. I'm a real money trader, and I want to show you guys how to make money. Let me ask you a question. First of all, how many of you are day traders? How many of you are swing traders? Or how many of you do both? Type in the word day, swing, or both to characterize your dominant style. And I will, on the fly, with live market charts, cover the types of charts that you guys trade. This is the agenda, and that's kind of it for my PowerPoints. We're going to jump right into live market charts here. Looking at 2-day in versus out trading. Wow, looks like mostly both. Interesting. I thought it would be mostly swing, but it's mostly both. And about 30%, 65% both, 30% swing, and 5% day. I used to be a statistician for Ford Motor Company, so I'm good at eyeballing the data. So a lot of both. So that's good. We've got examples of both for you tonight. Topics of the night. I'm not going to read through them. Instead, I'm just going to show you how to trade. Your goal is to make as much money as you can, as quickly as you can, while taking as small stop losses as a trader. Am I right? The goal that Steve and I have is to help you get there quicker than you otherwise would, and get you there safer and faster than you normally would. So one of the things I want to start off by looking at tonight is some actual live charts and show you an example of the type of strategy that I cover in the upcoming the Stock Trading Success educational product and the rest of it. But let's take a look at some high velocity charts. For swing trades, you want to use a 15-day, 15-minute candlestick chart and a 90-day daily candlestick chart. And we're going to take a look at some of these right here and right now. One of the very first giveaway strategies I'm going to tell you right now, and I published on this in Stocks and Commodities, it's a champion strategy. And there will be a quiz with an Amazon gift certificate giveaway coming up in less than 2 minutes. Here's the strategy. Look for a red ADX 14-step standard parameter line to come from below, pierce the 40 moving average line on an equity that's in a current uptrend. Now, odds are you're going to miss that day, but that's fine because what we want to do is go in long at, say, 50 cents above the high of the day in which this arrives. I like to look at this kind of like a shark underwater, and then all of a sudden it emerges. Wilder's average directional index is a measure of volatility. It's kind of like a volume control or thermostat. The higher it goes, I've got people I've seen out there, competitors who get it wrong. They say if ADX is over 30 or 40, it's extended and it's going to drop. Nope, sorry. I've made lots of winning trades, a lot of money trading ADX breakouts the right way. ADX goes up. As a professional breakout swing trader, I'm looking for where to get in and which charts are going to make money versus take stops. ADX like a shark, bump, 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 bump. It comes up over the 40. Your buy signal is going to be 50 cents. It's a right or down, or 50 cents above the high of the day, which is a signal day. And you may have seen that in my stocks and commodities article a couple months back. But anyway, that is the signal day. Look how much money could you made as you traded that. Now let's take a look at a quick test chart here. GT, another good example of a volatile runner. Now, I don't know about y'all, but looking at charts from yesterday is useful, but I only get paid because I don't have a TARDIS and I don't have a DeLorean, so I can't go back in time and make money by trading charts in the past. I only get paid as a professional trader when I get it right on the right side of the chart. So, here's your first Amazon quiz question, $10 to the first person who can answer this. 50 cents above today's signal day for GT would signify a long breakout at what price point? Rounding to the nearest dime, using 33.20 as the long. And Lisa got it. Yay, Lisa. All right, Lisa, yay. You're one of my longtime traders. Lisa L. All right, you got it. $10 coming your way. Straight out of Colorado, where I live from. So do you see this? This is the first time, well, actually, here's the first time it poked its head above the 40 here. You could have made money if you traded the 50 cents move there. Booyah. Here it did another explosive breakout today. See, how many of you like today's charts? I think that's kind of a helpful strategy is, I like to look at what's moving today and how to trade it. Well, anyway, it broke over the 40 today, so that means it's primed for, you got a bullish cup continuation and an uptrend, slowing down a little bit, but we have a nice ADX signal telling us there's new volatility coming into this instrument, the engulfing pattern here. So we've got a nice breakout. So from an ADX signal standpoint, that's the type of, and that's just one of a handful of charts that we're going to go through to give you strategy tips. Here's a good look at one in history of how that works. And that's a rider downer. Yeah, you have my guarantee. That's a very good professional chart. It's easy, right? I like teaching things that are simple and work most of the time. The reason it works is because institutional buying volume looks at those kind of signals, and the algorithmic trades and all that kick in if you have an ATR extension along with an ADX extended that attracts new buyers after that signal. So playing around with it in the upper right side of the chart on a signal breakout makes for a really good, sensible trading strategy for an entry. Let's take a look at another pattern that I like using a 90-day candlestick chart with Southwest. Okay. Here's another Amazon giveaway. I'm just going to do a lot of them, minimum 5 tonight. Who can tell me the first reversal sign occurred on what day in this chart? Dum bum bum ba ba dum bum bum. First bullish reversal pattern occurred on what day, and name that pattern. What is that pattern? Anybody? What is the breakout, or I should say the pivot pattern in this chart? On what day did it occur? After a lot of selling.
Ken, sorry to interrupt. It sounds like there's a little echo where you're breaking up a little bit for the last couple of minutes. So I'm not sure what could be done about that, but just wanted to give you a heads up.
Oh, sorry about that. Let me try again here.
Okay.
Pulling the gain down just a bit. Is that clearer for everybody? Is that good, Steve? Am I coming through loud?
Say something again.
Am I coming through okay for the audio?
No, to me it sounds like a little bit of an echo.
Is this better now? It's speaking, testing, 1, 2, 3. Doing a quick audio check.
To the others. Yeah.
Let me do a quick check. Sorry, we got hundreds of traders here tonight. Just wanted to double check. Normally the audio comes through fine. Not sure if
now you sound fine. Now it's good.
Now it's good. Okay. So who can tell me the first pivot pattern on what day occurred here? Okay, thanks everybody. Appreciate it. Good to hear. Sorry about that. It's bandwidth. We have so many people on the session here tonight. Technology gremlins at work. Anyway, who can give me the date? I want a date. You're right, Aditya and Lisa. Don't limit one per person. And Stan, you got it. Stan D. It's a hammer right here with a bullish engulfing, right? So we've got a hammer and a bullish engulfing made for a pivot. One of the strategies that I would add to that, and I'll ask Steve for commentary later, but one of the things, and you're right, it's a bullish engulfing here, but that was the hammer. And oftentimes you'll find, at least I've found in my own trades, is that you get a hammer plus a bullish engulfing. And if you get a nice high volume move, that often leads to a good breakout. Now, another quick strategy that I wanted to cover for you is this one. And we're going to do another quick giveaway in just a minute. A wide range candle at the right side of either a bullish cup or, in this case, on a recovery play. Whenever you see a wide range candle that pierces a major moving average line, you often see a good breakout continuation. So, for example, here you can see the S&P hammered out a low with a bullish hammer. It's hammer time. A hammer there, another bullish lower shadow there. Not quite a hammer, but it provided support. And now you can see it started to lift up. Here's a tall green candle that made sense to trade because it's parked right above a major moving average line. And one of the things that you'll find in your trades, especially true on these 90-day charts, is whenever you see a tall green momentum candle that's either piercing or parked right on top of a major moving average line, that often leads to additional buyers coming into the instrument. So that's another strategy point I thought I would make for y'all tonight. All right, one of the things that you see when you're looking for entries and exits, you see a large candle. That's a momentum candle on high volume, and that tells you you've likely got pretty good volatility that'll lead to another breakout. So that's a quick scanning strategy, is look for that type of a pattern. Okay, so another good quick question here. Who can tell me on what day, roughly, was the wide range candle that pierced the 200 moving average? For $10, Amazon gift certificate goes to the first person who can tell me the date upon which we had a major green. Oh, now everybody here is basically like all these dozens of answers. The correct answer is, survey says, it was the 4th, and so let's see. Aditya, you got it. So Aditya. Congratulations, you're our next winner. What I like about this pattern, what you'll find in your own trades, at least what I found in my own real money trades, is it's very simple to look for continuation patterns. Let me ask for a quick, brief comment here. Well, I'll ask Steve during his portion to comment on this, but let me just mention, as a momentum professional trader, what I look for are things like a large green candle at the right side of a bullish cup. The other signal to look for visually in all of your trades is an increasing average true range candle sequence. We have 2 or 3 green candles that are getting larger and larger, preferably on higher volume. That'll often dry up the supply and lead to a price explosion breakout to the upside, which is what I like to trade as a breakout trader. So I don't fish around for bottoms unless I see a clearly defined hammer or bullish engulfing. Even better if it bounces off of a moving average line, but what I prefer is a sequence of large green candles getting larger and larger. I like to cut, for all my traders, thousands of traders I've trained, kind of baby bear, mama bear, papa bear. You see an increase in volatility that then leads to an explosive breakout to the upside. And then you can always get out if you see a bearish upper shadow, similar to but not quite a shooting star because the lower shadow is more than 10% of the whole real body, but bearish upper shadow, we've got a bearish engulfing here, and that is a sell signal on a loss of support right there. So that'd be fine for the entry and the exit.
Right, and what I mentioned, Ken, you were talking about the, length of the real bodies. One of the things that a lot of traders don't realize is you could use the real bodies, as you discussed, to gauge momentum. So, for example, that tall green candle, although it's at a resistance area, it's, and we'll look at this when we talk about my part, but one of the things we should look at, not only if the market's at support or resistance, but what type of candlestick line you have at the support or resistance. So yes, you're pointing to a resistance area, but there's really no signs out of the candles that the bulls are losing momentum. It's not like it's a shooting star or a doji. So what that does is increase the likelihood of a breakout, potential momentum play.
Mm-hmm. Yeah, good point. And it's this. What I'm looking for in cycles and trading and momentum breakout trading, and it's one of the things that I found, if you want to make a good winning trade day, if you want to take a rack of trades out of the market, and these are real money trade confirmations for my own Interactive Brokers account, making 1,800 in a single day. One of the trade management strategies I would add to that is when you're doing breakouts and you're looking for keeping your stops as cheap as possible, like under 60, 70 bucks, and making up 1,700 bucks and winning professional trades 100 or 200 bucks at a time, this type of chart pattern is especially well suited for what I call a small ball or safe conservative approach, because what you see is the increase, like Steve had mentioned, I'm looking for increasing heat. I'm looking for an increase in volatility, just like that EXPR, the ADX line over 40 told me that new buyers are coming into that, so that's why I went long up here. Well, actually, I waited till, actually, I didn't get in until this day. It was 2 days late, so it's good for up to, say, 4 to 5 days after the signal line, and that's really good for swing traders, and it's the one consistent volatility indicator I found. Similarly, I want to teach how to make money as a trader. One of the things you're looking for is a story. It always like a beginning, middle, and an end, or the story arc in a movie or a TV series. There's the small, medium, large. That means buyers are coming into it, and then we don't buy at resistance. I use 50 cents or so above the whole number or above the current resistance line here. In this case, that would put us in at around 1890, 19, 1910. Up here, 50 cents is a safety buffer to avoid a false breakout, and that gets us in on a good breakout continuation play. Okay, so one of the things that, let's switch gears now to intraday, because I know I got so much I could teach you, but one of the things I want to get you in on are the very strongest charts and how to trade them professionally. If you're seeking to take money out of the market, the goal is to keep really tight stops and make sure that you play the outlier charts, the high velocity charts. If you take nothing else from me from today, one of the key points that I've taught so many traders over the world is avoid chopping, avoid entering anything that is inside the previous day's high-low range. The reason is volume doesn't come in until you're above the OHLC. That's why the institutional algorithmic traders use the software and dark pools and liquidity traps and all that stuff. They fool around with it inside the previous day's range. For proof, ask yourself, hey, is this guy Calhoun know what he's talking about? Go back over your last 20 trades. And I can almost guarantee you that at least 70, 80% of them that stopped out would be because you entered the trade on an in move. It was inside the previous day's high-low range. To avoid false breakouts, I like to use roughly 30 to 50 cents above an aggregate previous day's high for an entry. So I avoid a false breakout, kind of the shake, the handle of the cup here, and instead I get in on a sequential breakout up at a 2-day high on a continuation play. So visually, if you want to do yourself a really big favor as a trader, and so many thousands of traders have written in testimonials and thanking me for this tip, it's a good rider downer, and it's a good, valuable, honest tip that works most of the time. Simply don't trade anything that is inside. On the wall on street, we call it in versus out trading days. If the S&P is inside or the Dow's inside previous day, same thing with your charts. Only trade out charts. Buy new highs up at highs. Or if you do pivot trades, make sure it's gone all the way down to previous support and then has a hammer or bullish engulfing, accompanied preferably by high volume on the pivot before you try and do a pivot trade. I like to wait for breakouts, and this is the type of chart that I like to play with. So let's do a quick strategy for a Amazon gift certificate number 4, and limit one per person. Stan and Lisa, you guys are aces. You're right in the pocket with these, but let's give other people a chance. Given that I want to use with this volatility, and this is one of the gold miners that I trade, AEM. I also trade Barrick, ABX, and Newmont, and GDX, but AEM, one of the good gold mining instruments today, really good breakout. Here's the question. Riddle me this, Batman. I'm going to get in 50 cents above the nearest whole number high. Where's my long trigger in AEM? First to answer gets 10 bucks via emailed Amazon gift certificate. Wow, I got like 30 answers already. John G, you got it first. Then let's see, just in order of who got it. It's Larry, Robert, DT, Steve, Chris, Raj, Wendy, Thomas, Mike, Jagdish, Rich, on and on and on. But John G, you got it first. So congratulations. $10 coming your way as my gift for being smart and fast to the draw. See, in trading, there's the quick and the dead. Either you're responsive to making good trades or you're not. Now, let me show you one last chart that I'm in long right now, and that is UWTI. A quick strategic tip. I am playing the bounce in crude because Look at the profit potential. UWTI, 4,000 a share. Split adjusted price now on sale for a paltry. It did a 20 for 1 or a 10 for 1 reverse split on Monday. Anyway, it got new buyers. It's currently at 25 a share. I expect to multiply my retirement account by just playing the bounce crude if and when it materializes. We're starting to see some buyers over the moving average line. Here's your quiz question. Number 5. I'll probably do more of these tonight because I'm just in a generous mood and I'm rich, so why not? To scale in on a position trade, a long-term strategic play, where there's a lot of upside potential, I want you to use your 50, your 100, and your 200 moving average lines as key decision support tools. You never, ever, ever buy right under a moving average line. You always, always, always buy right over a breakout because that's where institutional volume is going to come in. I'm already long here. Riddle me this. I'm going to get in 50 cents above the next moving average line, $10 to the first person to give me the long trigger for my UWTI trade. Where should I trade it, guys? What do you think? Wow, lots of answers. Isn't this fun? I'll give away more because I got a big budget, so that's cool. DT got it. And you're one of my longtime traders, so DT got it. 40.50 is the answer. 40.50. Right? So when it comes to position sizing and scaling, typically, and I'm going to turn it over to Steve now in just a second, but when it comes to position sizing and scaling, I usually add on my swing trades every 2 points or so. So let's say, where's another good chart here to work with? OUTR is really good. Okay, here's another $10 giveaway for position sizing. My classic strategy is to buy at 50 cents above the nearest whole number high, and then the next entry is going to be 2 points above that. So here's an if then, and I love gap continuations. I know Steve likes windows, as they're called. If my first trade is at 40.50 for my first 100 shares, where do I buy my second 100 shares? Where the heck do I scale in, guys? I'm in at 40.50. Where do I buy more? Buy, where? And survey says... Chris almost got it, but let's see. Timothy E, you're our next winner. So that's number 6. I'll probably give away a lot more. So stay tuned for more. I'll give away more of these. Is this fun? Because I like to help you guys learn how to really trade. Like when I do my Las Vegas seminars with dozens of traders, or I speak at the Money Show events in New York and Vegas and Dallas and all over the place. I like to make it interactive. I'd say turn to the trader next to you and discuss. But you're exactly right. 42.50 is the next entry. All the trades you make, and I'm going to turn over to Steve here momentarily, all the trades that have made the most money for me didn't start off as 100 share or 250 share trades. They started off walking before they ran. Okay, all my winning trades. I've done over 4.5 million in trades in a single year, 4.4 million, I should say, in 2 years. Okay, I'm a good trader. I know how to trade. But they all start off real small because I don't like to get burned when I'm wrong. So I'm the master of itty bitty, super tiny, eeny weeny tiny, not polka dotted bikinis, but tiny stops. Because I get all these shots at being right. And when I am right, and I've scaled into these things, maybe 50 or 100 shares at a time until I build the trade, then I sell it all at the first sign of trouble. I take my money and run. That's a $1,700 day. And that's how a real trader does it. So it's one of the things that's been missing from the trading education industry is kind of like real money trades and how did he do it. But I like to play it safe and small. I think nobody should be out there trading 500 or 1,000 shares or leveraged or margined accounts at all. You should never trade on margin unless you can make money trading cash, right? Otherwise, you're just magnifying your mistakes. So don't magnify mistakes. Instead, leverage profits the right way, the small way. And I teach how in our educational stock trading success system and more. So anyway, is that good so far? I'll come back in just about 20 minutes, but let me turn it over to Steve now because he's got a really good presentation with some outstanding charts and strategies to cover in tonight's event. So, Steve, take it away.
Okay, thank you. Okay, and thanks for pulling up the chart. So, one of the things that one of the reasons I wanted to invite Ken to the special and we work together is Ken is the go-to guy for intraday charts. As you probably know, I'm the go-to guy for candlesticks. So as I mentioned in the introduction, the synergy of both our strategies really helps not only getting those early reversal signals, but trading, and that's what the focus of Ken's portion of the seminar is trading breakouts. But a lot of traders don't realize, even when they're using swing charts, in other words, daily charts, the importance of intraday. So what I'm going to do now is, if we go to the next slide, go over some of the strategies that you could use with intraday candlesticks. And I'll do a few of these with real-world examples in a couple of minutes, but with the candles on an intraday chart, you can find early reversal signals. We know candlesticks are great for getting potential tops and bottoms in markets on daily charts, but the advantage of doing it on an intraday chart is you don't have to wait for the close of the day. If you're looking at a 30 or 60-minute chart or even a 15-minute chart, all you need to do is wait for the close of that intraday time period to get a completed candlestick signal. The next bullet point, hidden support or resistance. Many times on a chart, a market will rally or sell off very steeply, and it's really hard to define a near-term support or resistance area. But by telescoping down into an intraday chart, you could find support or resistance not evident on a daily chart. Another aspect is the market overextended. Let's say a market rallies very sharply over a period of 5, 6, 7 days. On a daily chart, it might look overextended, but what if during the rally on an intraday chart you see the market rallies and then trades sideways for a few hours, and then rallies for a few hours, and then trades laterally for a few hours? That's kind of a step case progression. It's like that song Stairway to Heaven, right? And a rally like that can go on in a long time. So from a daily charts perspective, it may look overbought or, in the flip side, oversold. But when you see it from an intraday perspective, it's really a self-correcting market. Again, I won't have time to go through all these examples. We'll talk about a resource where I go into a lot of detail on each of these and lots of real-world examples. And the last bullet points, there are a lot of hidden secrets for using daily charts for intraday traders. So, for example, one of them would be, let's say you have a hammer on an intraday chart. See if that confirms a support area on a daily chart, because more traders really are using daily charts than intraday charts. So if you're finding an intraday signal confirming a signal on a daily chart, the odds of that trade working out are much, much higher. But let's look at a couple of examples from some of these bullet points. We go to the next slide. First, we'll look at earlier reversal levels. Okay, so on the chart on the left, we could see a classic hammer. This is actually almost a perfect hammer. What we would actually call a strict criteria hammer, because a hammer could have a white or black real body, but if it has a white real body, that means it's closing right near or at the high of the session. So here we have a nice hammer, but the downside of candlesticks is because you need open, high, low, and close, we had to wait for the close of this daily session to get confirmation of, in this case, a bullish hammer. Now, on the same day, on an intraday chart, notice another hammer, and as I mentioned before, it could be a black or white real body. So this is a great hammer because the lower shadow is multiple times longer than the real body. For the definition of a hammer, the lower shadow need only be twice the height of the real body, but obviously the smaller the real body as a percentage of the lower shadow, the more potentially positive it is, because it shows the market had sold off very briskly and then bounced back very smartly. So here we had a hammer, and notice it closed, because we were looking at an intraday chart, in this case a 60-minute chart, we got that bullish signal at $49. So essentially pretty much an extra $4 of potential profit by looking at an intraday chart. So if we go to the next slide. Okay, great, thank you. Okay, so here, just a couple of months ago in Google, okay, now notice that, and I wanted to show you this slide also because although these strategies are great for outright equities, you can also use them for options. Not many of us are going to trade Google or an Apple outright. So keep that in the back of your mind. So here we have the lows made back in February this year on Google. And on the daily chart, there were really no reversal signals with the candlesticks. On this session, it wasn't a hammer or a bullish engulfing pattern. But interestingly, if we go to the right, the slide on the right, on the same day, you can see that dashed line. During that same day, clue after clue after clue, we had a hammer, we had a bullish engulfing pattern at the second blue arrow, and notice how that bullish engulfing pattern was confirming a support area set by the opening session on the 8th. So it didn't take a rocket scientist to see a plethora, a group of candlestick signals confirming a support area, and that's what I really like when you have candles confirming support or resistance. So a series of clues that you got on an intraday chart, in this case a 30-minute chart, that you did not get on the daily chart. So this is what I mean by earlier reversal signals, and actually in this case you could also view this as a hidden buying area, that those who looked only at a daily chart missed a great opportunity to buy. Look at that, just rallied from 665, 668 in that area up to the doji right around 720 on the daily chart. So again, one of the major advantages of using intraday compared to a daily chart. Doesn't mean don't use the daily chart, but the focus of this seminar is using intraday charts to give you those timing and trading advantages. Let's look at another example on the next slide. Okay, here on Amazon, and this was a while ago, this was pre-split, but just to show you another example of how there were no reversal clues really back here a while ago, but on an intraday chart, a group of signals, a series of bullish engulfing patterns, a bullish engulfing pattern there, a bullish engulfing pattern there, and then a hammer right on the right, again confirming a support area. So once again, a group of signals that you would not have gotten on the daily chart. And this doesn't only work at bottoms. This works at tops as well also. One of the challenges, and we'll look at that on the next slide, one of the challenges we all have is not only when to get in, but it's actually more difficult to know when to get out. Because getting in, you could think about it, you have time to analyze, so you could be proactive, but once you're in a trade, you're really reactive because the market is more in control. So you have to be very nimble, very quick to know when to lock in those profits, or especially for you option traders that make it, because it's very easy to profit on bear moves in options, to go short. So here, again, this was pre-split in Apple, but just to show you on the daily chart, really no reversal signals, maybe a little bit of resistance right around the 705 level, but on the major highs, if we look at the intraday chart, a 30-minute chart on the right, we had back-to-back bearish engulfing patterns right at the same resistance area, right around 706 in that 705 in that area. And one of the things that we always recommend is always having a protective stop. So in this case, for those of you who would are not using this to take profits, in other words, liquidating some longs to lock in nice profits, but for those of you who are using a bearish signal like this to consider a bear trade, a short trade, it's very easy to see where you set a protective stop, somewhere maybe above the 705, 706 area. Okay, if we go to the next slide. And one of the bullet points, if you remember, was finding hidden support or resistance. And we'll look at a couple of really neat examples on that. And so here we had a nice rally, and most of us would see that on this day, this happens to be like April 15th, on this day, where would we find first support? And as I started to say, most of us would look at around 78, a little above $78 as a support area, because it got down there in early April. It got down there with not quite a hammer, but on April 10th, very long lower shadow. And then we had a piercing pattern on the 14th. So right around the lows of 78. But look, that's about $5 under the current close. So one of the strategies you could do, and I normally don't go less than 15 minutes on this, I'll look at a 15 or 30 or 60 minute, is shift over into an intraday chart. So we're going to do April 15th. Right now we have a daily chart. So let's move into an intraday on April 15th on the next slide. and we could see that's April 15th, okay, because this is an intraday, you know, that's on a Tuesday, and we could see where there's an evident support area. You don't see that on the daily chart, but it jumps out at you on the intraday chart. So now we could say our first support is $82, and it doesn't mean 78 is not support, it just becomes a second support area. So if the market closed under 80, in this case 81, let's say 81.80, 81.90, the next target would be towards 78. So I have what I call my if-then principle. If the market does such and such, then my target is such and such. A lot of times I'm asked questions, hey, do you think the market is going to break above support or resistance? And my reply is always, I have no idea, but I could tell you what to do if it does. So in other words, the question would be, hey, is the market going to break under 82? I don't know, but my if-then rule would be if the is under, let's say, 81.75 to be safe, then my next target would be towards 78. So we always have a strategy in mind based on the market's action. So here, getting back to the premise of hidden support or resistance, so here we have a support area right around 82, and if we go to the next slide, ta-da, so you can see that tall white candle from, looks like about April 15th, and there would be no way, based on looking at this daily chart, to know that there was a support area right around 82. But thanks to the intraday chart, a clear and present support area was gleaned that we could use to set a trading strategy. And let's look at another example of this, hidden support or resistance. Okay, so this this was back in February this year. So here we have this tall white, this white candle with a very long lower shadow, and again, we would say maybe our support area is down around 22 because it was the lows back in around February 26, and as Ken has shown you back there, very evident support area. But once again, as a percentage basis, you know, you're only talking about $1.40, but as a percentage basis based on the price of the stock, that's a big percentage drop to get a first support area. So the strategy is go to an intraday, and that's on the right. So what we could see is, we could see what I call change of polarity. Many of you who have heard our education know it's one of my favorite Western strategies, where essentially a multi-tested resistance area, it has to be tested at least twice. In this case, it was tested 3 times. Once the market closes above it, as it did where Ken's pointing on this tall white candle, here you have a breakout, right? So now you could trade a breakout, and you have a stop. The old resistance, right around 2330, 2340 actually, should be a support area. So this is a great momentum trade, and also it shows us where the potential first support is now. So if we go back to the daily chart on the left, on that red line right over there, that's 2340. That by going to this intraday chart, we now knew, unlike those who were looking at the daily chart, now knew that 2340 is a potential support area. And as we saw on the prior slide, there would be no way to know where this support is if we only looked at a daily chart. So once again, emphasizing the importance of adding intraday charts for those of you who have the ability, you know, to be at your desk, your trading desk, or even at the end of the day, you know, you could put up an intraday chart and see what happened before, and see, you know, here, hey, we have a change of polarity, and notice that even, you know, on the 29th it pulled back there a couple of times, so we had plenty of buying opportunities on any retracements. Now, something else I also want to mention, because we talked about the ability to take advantage of bear trades, especially for option traders. It's a little bit challenging to do a bearish trade, to get a bearish signal on an outright equity, but by using inverse ETFs, as we show on the next slide, okay, it does give you the ability to profit, because now is such a great time to really get educated on how to take advantage of up and down moves. We've had really big swings on the bull side and the bear side. You know, up until 6-9 months ago, if you were on the short side, you wouldn't, or did a bearish trade, you wouldn't be around too long because the markets overwhelmingly were trading positively. But now we have big swings on the upside and the downside, and it's equally important to be able to take advantage of not only rallies, but bear trades. So inverse ETFs let you take care of that. So let me show you an example of this on the next slide. And here we have a 60-minute slide. So here, remember, an inverse ETF, the dogs is the inverse of the Dow. So as this rally, as the Dow sells off, this rallies. So here on this intraday chart, we had a bullish engulfing pattern confirming a key support area right around 2255. So I just wanted to show you this slide just very quickly to remind you that inverse ETFs are a great way to take advantage of bear moves, and and all the strategies we're talking about here can be used on ETFs as well. So not only from the bear side, but obviously from the bull side. So I want to thank you for joining me, and we'll go over some bonuses I'll be giving in the next couple of minutes. Next slide or two, we'll talk about. Do you want me to talk about the bonuses, Ken, or do you want to?
Yeah, sure. We have a big announcement coming right up, and then also some additional gift certificates. But there's a couple of bonuses that Steve has graciously added into the offer that we're about to make. So we're doing a nearly half-off deal for our key system for everybody, our stock trading success system. But let me, Steve, tell them about the bonuses.
Okay, just very quickly, because we're going to be Ken's going to be talking about a first time ever event in a couple of minutes. So let me just do this very quickly. So as a bonus, I'm going to be inviting everybody who invests in what Ken will be talking about in a couple of minutes to what we call a private roundtable. And what that means is you can ask me about any U.S. market you want. It could be even although the focus here is on equities, but you could ask me on any market you want. And I'll give you my outlook, and I'll answer your questions. And what's great about that is you could actually use these ideas to plan a trade the very next session. So, that is a special bonus we're going to be offering. And then the next one, if we want. Okay, and also one of the things that I came up with, what I call Nison trading principles, and these are core principles right from, I'm saying oh gosh because I've been using Western Technical since 1974 and candles since the 1980s. So some of my best trading principles over the last actually 40 years now. Got to change 30 to 40. 40 years, and it's an hour of very specific trading rules, my trading principles. For example, I talked about one of them, my if-then rule. So I have a lot of rules like that. So that's an instantly available bonus for those of you who take advantage of what Ken will be talking about in the next minute or two.
All right, sounds good, Steve. And thanks so much. One of the things that I've really learned in my own real money trading based on all the experience I've had with Steve is combining the best of the East and the West. And a good example of that is found in this chart. Now, hey, Steve, correct me if I'm wrong, but if I take this right, what I learned from you would be this would be a hammer finding support, which is why it rallied, and then it retested support, and then that was the big 170-point run in the S&P. So this was pivot number one. This is a confirmation, not a hammer, but it did technically confirm support here. And so that made good sense for a pivot trade, correct?
Exactly, and one of the great things about the candles is you could use them as protective stops. So if the market closed under the low of the hammer, if you bought there and closed under the low of the hammer, if you're long, you're wrong. So yeah, it was a great buying opportunity. Some of you may want to wait for some bullish confirmation. You could have waited until the next session. Another strategy could have been on the day that the market retested the hammer, although there was no candlestick signals on the daily chart, go to a 60 or 30-minute intraday chart to see if there are any bullish candlestick signals confirming that support area.
Right, and another good point before we talk about the resource is it leads in nicely to what I'm going to teach you. Having a professional systems approach where you're combining the best of the East and the West, where you're combining the best of Steve's pivot strategies, which work brilliantly. I mean, whenever you're looking to validate a concept, check it against the S&P chart first and make sure there's validity, and reliability and consistency, to use statistics terms, as well as repeatability. And so one of the things that you could combine is, here's the pivot signal. My breakout signals are if we recover the nearest 50 MA line on a 90-day daily candle chart with a large green candle. That's a buy signal to me above the high of the close of that green candle, and that made for a nice, healthy 40, 50-point run in the S&P. So from a trade management standpoint, let's say you're late to the party. Let's say you didn't get in there. Let's say you got in there for the first leg up. Let's say you're trading an instrument, like XIV, which I like to trade on a pivot. That would be, even though we didn't see the hammer in this is just a doji, not a reversal sign. You did see it in the S&P. The confirmation for a second scale-in trade occurs when it gets back above the 50 MA line, and again over the 100 MA, and again over the 200. So before we tell you a little bit more about the system, I just wanted to frame it by telling you you can really learn a lot by combining what you learned from Steve with what I've got to share with you for a good professional 1-2 approach. And that's why it's been so popular and won industry acclaim and hundreds of testimonials and all that from people. Is it's great to get in on pivots. I tend to wait for breakouts. The smartest way is to do both, where you're putting on a small pilot trade at the first sign of a pivot. Then once you have bullish confirmation above a key Western technical, maybe it's a cut pattern, previous resistance with a moving average line breakout, that's where you scale in or add to a winning trade. My biggest winning trades have all been from where I've added or scaled to existing trades. So with that, I think it's helpful to learn from a real money trader. So I think that's one thing that I bring to the party. Let me tell you all just a little bit about the Stock Trading Success System. I wanted to encourage all of you right now, because we've got so many hundreds of you here today, and we've got a very big site. It'll take maybe a minute to load. If you would, at this moment in time, please go to a browser and type in stocktradingsuccess.com, and it'll take a minute or 20 seconds at least to load up, and let that get working while Steve and I go over what you're going to be getting. Now, one of the things that we're doing, and we're really pleased to announce, is a big discount on this, because we're launching for the first time ever, drumroll please, the downloadable version of this. So I know a lot of you have been asking for this over the last year or two, and so Steve and I carefully put this together for you. We've got lots of bonuses added, and what we're doing is providing a downloadable version at a 30% off of the regular rate. So it's only, $6.95 for the whole system, plus 18 months of webinars with me and all the bonuses that we're going to tell you about in just a minute. But we're really excited to bring this to you. Let me give you a quick overview of what we're doing. Now, Steve and I had this cartoon made up. Your profits can go higher with 2 pulling for you. Steve, let me ask you a question. I think one of the things that people are wondering about is, well, how is this different from learning, say, from your current offerings, or what you've got at the Candle Chart site? And my trader is wondering, well, how is this different from what I teach traders in my various sites? Any insights on combining the best of our strategies? So kind of 2 heads, 1 + 1 = 3 with our traders, all of you listening being the third part of the triangle. But any insights on learning from both of us and how that's a little different from what we've covered individually, how we combine and put our heads together to help traders make better trading decisions and hopefully make better profits more often?
Right, as I mentioned before, and actually you're saying put our 2 heads together, but it reminds me of a Japanese proverb related to hands, like the right hand helping the left. Two different, what I would say, 2 different approaches that merge into one and one make, like you say, 3. My focus is on candles. I do a lot of new strategies on intraday candles in this resource. And obviously your focus is on intraday, more from a Western technical perspective, but you also combine some candlesticks also. We worked together for so many years. But, the idea is that you are the go-to, as I mentioned before, the go-to person for day trading. Hopefully I'm the go-to person for candlesticks. And that combination really gives, based on all the testimonials that you'll see on the link that Ken gave or will be giving you, will really help you get those early reversal signals. The idea is to get the reversals and the breakouts signals before other traders see them, so you get in as the new move is beginning, and equally important, knowing when to lock in those profits, because many of us have we've had this happen time and time again. I'm sure you have a profit, and by the time you decide to get out, for whatever reason, you're second guessing yourself. All your profit has evaporated. It now turns into a loss. Then you say to yourself, please let me break even. I'll never do this trade again. And the loss keeps on going and going. So you'll have definite rules on when to lock in some profits. We have really cool, what do we call it, the hot seats. The hot seats is a great way to learn from other traders also.
Right.
Actually, yeah, Ken, why don't you explain the hot seat? It's so cool.
Yeah,
on this resource. Yeah.
Yeah, sure. One of the things that I thought would be helpful for all of you to see, and again, this is mostly for swing traders. I'd say maybe 60-70% for swing traders and maybe 30% for day trading. One of the things that we've got put together for you in our stock trading success system, which is the only system in the world, this is the biggest and most comprehensive stock trading system on the planet, and this is the biggest and best website out there. Our design team spent several hundred hours putting this together at enormous time cost. Stocks and Commodities, Janthi had kindly put together, and thanks Janthi if you're out there, a very nice review where she said, by the time you're done with this system, you'll certainly gain enough knowledge to trade for a living. And to my knowledge, she's never said that, and no one else said that in the industry about any other system out there in the entire trading ecosphere. So anyway, and you can see we had 103 testimonials and all kinds of video testimonials. And what Steve was talking about from Hot Seats is Steve and I did a seminar together, and we had traders come up and explain their problems. Maybe it was, I got in too late on my trades, or I can't scan for my entries, I don't know what charts to trade, or I'm uncertain when I decide whether or not to pull the trigger on a trade. Stephen can't help. What do I do? And so what Steve and I did was put our heads together, and we first asked the audience to come up with their ideas, and then we helped solve the problems. And it's the only place in the entire industry where you've got this turnaround approach from two top industry experts addressing common issues with very specific, actionable techniques that traders can use. So, and I agree, Steve, that was a really good part of the session that I know our traders will really appreciate, because no one else does this to help traders fix problems. Kind of like that great TV show, The Profit. The guy says, I fix failing businesses. Well, Steve and I work to fix failing traders, and this is one place in which we really shine, and the traders are really amazing with their candid ideas, and we gave them some very helpful insights to help them in over an hour of hot seat training. So a good point. So anyway, let me get back to this for a second. We'll take a look at that. Steve has been seen and featured everywhere. He's got a lot of, like I have, we both have a lot of copycats, but we originated and are the best go-to people for these things. Steve for candles and me for momentum swing trading and momentum intraday trades. One good tip that one of Steve's colleagues, Paul, had mentioned is that we should mention you can apply these strategies to multiple markets, and you're encouraged to look at the preview videos, but it's designed mainly for New York Stock Exchange and NASDAQ stocks and ETFs, but you can also apply what's taught in the strategy to other world markets, because the patterns are timeless, and the thinking behind, the strategy behind the entry and exit techniques that you're about to learn can be applied across international lines. So you can see here from a P&L, it's good to learn from people who are actually, real experts. Steve had the best P&L because he took the smallest stops, I'm sure, and made the most. I've had as much as the $3,700 single trading day in the money in a real money trade account. So down 36, up 3,700. That makes for a good. I did over 4.9 million in trades in a single year. Boom, flawless victory. I like to make days that look like this. All right, I don't know about y'all, but how many of you would like to make trades? Again, I can't promise that you two will duplicate. Hopefully, do better than I do. But how many of you would be happy with a $500 or $1,600 or $400 up trading day? Does that make sense in terms of a reasonable, not a stretch goal? I'm not trying to get you guys to $10,000 trading day or $1 million day. I think that's unrealistic. But if I can get you to where you can make a few hundred a day, does that sound like something you might be interested in? Because I'm a real money trader and I know how to do it. I've done it. So even on a small account, this is, well, relatively small, $37,000 account. So you can see this is my IB P&L, 35K cash. I like to stay mostly cash, put my money out, take the money and run and be done. And these kind of days, for me, these are good days. I'm happy taking a 500 or 400 if I'm get a really good day, maybe 16 or 1700, but that's the type of day that I shoot for as a professional trader. Okay. So one of the things that I encourage you to give some thought to is ordering the downloadable version. It's only $6.95 with a $400 off coupon that we include. Normally it's $10.95, but we're doing a coupon code SAVE, and I'll show you how to enter that in a second. But the main thing you're getting here too is not just the downloadable videos of, it's 15 gigabytes, just under 15 gigabytes of nice high quality video taken directly from the DVDs. Never before available in the history of this system. This is a world premiere of the download version. What it includes, when you register by the 27th, normally I just give a 1 year, but if you register by the 27th, within the next week or so, I'll give you 1.5 years of coaching support with me personally, with bi-monthly, meaning every other month, every 6 to 8 weeks for a year and a half, you get to learn from me personally. And I'm a money show speaker, and I'm in stocks and commodities every month, and I'm just like Steve. We're both top shelf, experts and award-winning guys and all that in our industry. You get a year and a half of support with me. You also get 2 months of my swing trading alerts at swingscans.com. You get a couple months of my daily trading alerts at ChartScans, and there's no auto-renewing. It ends automatically after a couple of months, so it's just a bonus to get you started. Steve mentioned a roundtable that he'll be doing along with the Nison Trading Principles video, and you're getting a total of over 32 hours of content. And Steve, any quick insights on, I guess the value of learning all the hours of content that they're getting? We have all kinds of frequently asked questions, and the schedule's here for you with the upcoming webinars for the next few months, but we're really packing a lot of value into this. Normally this has been retailed at $19.97, and we've had lots of traders happily pay that over the years. We've had hundreds of traders cheerfully order at the $9.75 up to $14.95 price point, but right now, for a limited time only, we're making it available for a paltry $6.95 offer. So retail is $10.95. What I want you to do is when you order, go to the order form, click in the word save, and then be sure to click the apply button, and that'll knock your price all the way down to $6.95, and that'll give you access. The only thing I'm going to ask is, we've had so many orders come in, even off the preview information, give me 24 hours, give our support team 24 hours to get your individual login and password to you. You'll get access to 2 areas. One is the DVD download area. The other is the regular members area that's got webinar downloads, PDFs, MP3 files, audio support, and the rest of it, in addition to the webinar access. So anyway, with all the hours of content that we're doing, I mean, I think Stocks and Commodities said enough. You will certainly, not maybe, possibly, hopefully, on a good day, but you will certainly have gained enough knowledge to trade for a living. And we're backing it up with a full year and a half of webinars with me personally on top of it. So you get plenty of bonuses to make this well worth your while. You have my word. This is an absolutely, I'm very proud to be working with Steve Nison on this. Hundreds and hundreds of traders have ordered this very happily. We've only had, I think there was 2 complaints from Forex traders a few years ago. This is mostly for stocks and options and swing traders. Maybe not so much for currency trading or for other types of instruments, but it's a really good package. And Steve, any thoughts on maybe some of the benefits to getting coaching, with me, and then all the videos that they'll be getting of you and I together?
Sure. Well, first of all, this is speaking first. This is the first time we've ever made this available for instant, download, so you get it instantly. You don't have to worry about going to your mailbox and waiting for the for DVDs. Secondly, while there's lots of information, the way Ken is a real expert on editing, the way Ken edited these videos, they're very sequentially laid out, very easy to find what specific topic you want to know about. So the fact that you have these as downloadable means you can instantly go to, let's say you want strategies for using intraday candles, and then you click on that, or you may want to do something else like the hot seat. You may want to go to the hot seat, so you just click on that. So don't let the amount of information scare you. In fact, it's like having a virtual library of information where you can access whatever chapters that you want at any time. And what's great about the bonuses that both Ken and especially Ken is giving you, it's like ongoing education. That's something that many of you asked for. Okay, I'm learning a lot from this resource, but how do I continue my education? And by having these bonuses, it allows us to do that. You know, when I do my markets of your choice, you'll see not only if somebody asks me about a specific market, even if you don't trade that market, you'll learn the strategies that I use to pick specific trading ideas, and you could apply that to your markets. My Nison trading principles, these are principles, core principles you can apply to your markets immediately, and then Ken's bonuses are ongoing education. So it's the best of both worlds in two ways. One, it's the best of Ken's and mine, and secondly, it's the best of downloadable and instantly available education and ongoing education.
Yeah, well said, Steve. And it's, the neat thing is creating something you can be proud of, like having a kid that you're proud of because they're an honor student and they're straight A and they do great and they work hard and all that kind of stuff. And it's really nice to have a system that's withstood the test of time. And I support it fully by giving you guys training for a year and a half. And oftentimes, we get so many traders on board with the system. It's so popular. Hundreds of traders have ordered the system. I will stay around. I'll do a presentation for our current markets and current both candle and Western technical breakout and pivot patterns, and then I'll stick around and you can bring up your charts of your choice for a year and a half with me. So, and again, I just ask that you save questions for the webinars because we have so many people, and I will stick around and thoughtfully answer questions like I will do tonight too for you guys. But one of the things that I'm also adding, kind of like whenever you buy a big screen TV, Jim Rohn once said, I'm a big fan of the improvement industry, like my colleague Brian Tracy. But anyway, Jim Rohn once said, poor people have big TVs, rich people have big libraries, and you need to invest in yourself. And actually, rich people, we have both. But poor people kind of stop at the big TV and they stop there. If you're going to be wealthy, you need to invest in knowledge. One of the things that you do get when you get a big screen TV is a quick start guide, or any kind of newfangled device. Get one of those fold out sheets. Well, anyway. The equivalent for this is coming up April 4th. I'll be doing a quick start webinar for you guys, 45 minutes plus up to an hour even of Q&A at the end. So what I want to do is give you some usability strategies. It's like, okay, you've got all these downloadable videos, but how do you actually start making real trades with it? And I can teach you, with my own real trades, how I do it. So I bridge the link for you with the quick start video, kind of a blueprint for stock trading success, how to use the videos and the webinars, personal action plan, advanced tips and strategies, and also Q&A. And plus I back it up with a couple of months of alerts and my alert services as well, so you can get some ideas of what is worth looking at for potentially trading and where you should be trading it every single day for a few months as well. So really trying to pull out all the stops and, given what the industry says, and most importantly, our stock trading success system owners are amazing. You can see some of their video testimonials in this really neat video that we put together that we had professionally produced, or looking at all these. And Steve, remember I had to edit out a bunch of these because a lot of these had, I made $2,000 or $3,000 already. I'm so happy I did that. But because the FTC regulations on performance-based testimonials, I had to kind of edit out all the money that all these people had said that they'd made. So they're all satisfaction testimonials, which are fine. But originally, a few years back, pre-FTC changing the rules, we had 103 testimonials, of which maybe a fourth or a third were talking about how much money they're making thanks to what they learned. And you can see, the audience reactions and what people were saying. But remember that, it was really neat. They were saying, hey, I made $3,000 my first month, and they're really excited. Again, I'm not making a performance claim of any kind. There's kind of a disclaimer there, but just so you guys know, we had a lot of people write in with how much money they've been making thanks to the system. And it's really amazing to see the positive, feedback in what's largely a bad education industry. There's a few shining stars out there like Steve Nison and just a few people that are actually worth learning from. And I'm really pleased to be working with Steve, and it was really neat to see all the testimonials with the dollars, how much these people have been making thanks to what they learned from us in this resource. So any thoughts on that, Steve? I know we're going to wrap up here soon, but wanted to close it off.
Yeah, right. You know, we a few years ago when we had these testimonials on, they had dollar amounts in there, but these are still glowing testimonials, even without the dollar amount. So you know, we have to bow to legal regulations. But you can get a sense of, and you know, we have lots of little video clips also that Ken did. As I mentioned, he's really great on editing, so you get a real sense of, you know, what real world traders took away from the seminar.
Yeah, it's neat doing something right that you can be proud of, and you know, hey, get out there to the entire industry, and you know, you will not see more testimonials for any trading system in the entire world. This is the #1 testimonial trading system out there. You know, I've not seen out there anybody that has over 100 testimonials and backing by the review from Stocks and Commodities saying it's certainly have gained enough knowledge to trade for a living. So we just want to kind of make the case, yeah, it's worth getting, and it's a bargain for less than the price of a couple of blown trades, and for, you know, $6.95, or make 1 or 2 winning trades, right? All you have to look at it as you may be able to deduct it off your taxes too, but for 1 or 2 real money winning trades, I mean, you know, I've done more than $6.95, you know, in a single day. But you know, I'm just saying, if walk before you run, you know, if you make just 1 or 2 winning trades in the upcoming years ahead, this is a resource you want on your side. Now, another thing there is, because it's all downloadable at this price, we're not doing the physical DVDs. This is the download version. There's no shipping cost, of course. You get to keep the videos forever. They're not streaming, they're downloadable. So you can back them up on a second hard drive, transfer it to your Kindle or your mobile device. They're high quality WMV format videos that are really crystal clear and easy to see. And you know, it's less than the if you get less than a price of a couple of blown trades, or you make 1 or 2 winning trades, and it more than pays for itself. The only thing I want to, and the code is good through Sunday, March 27th. So sleep on it if you want. You know, this is one of the must-have systems out there. I'm really proud of it, and I'm really pleased to be working with Steve because he's a great guy. The only guy you should learn candles from. I've seen a lot of his competitors, and they totally muff it. I could see mistakes they make in their technical analyses and how to trade. And I say, you know, the mistake of learning from the wrong person can be hazardous to your trading health. So you want to learn from the go-to guy for candles, the world's best, and that's Steve Nison, the undisputed king of that area. And I'm one of the top guys for momentum, swing, and day trading. Just remember, when you enter save, that's your coupon code. So here's step by step. This is kind of some NLP in action. Neuro-linguistic programming. Click the add to cart button. All right. That'll take you over to a page that looks like this. Type in the word save. Okay. Click the apply button. Don't forget to click apply, because otherwise it'll still be $10.95. So click apply. It'll knock it all the way down to $6.95, and then, and only then, once you see that you've gotten $400 off the regular price, then click checkout, and you'll get your system access delivered to you within 24 hours. So anyway, Steve, I know we're going to wrap up here. I will stick around and answer questions from the house. Be sure to visit and bookmark the Stock Trading Success System page. Remember, it will take a minute or two to load with all the people looking at all the videos on the page, but I'm really pleased to be working with Steve on this, and really pleased to see all the amazing success stories from all the system owners, right? It's really neat to get all the positive accolades from the industry, and I'm really pleased that so many of you are here today. It's great to see over 1,000 people register for tonight's event. So anyway, Steve, any parting thoughts? I heartily stand behind this. This is something I would happily offer to my family and friends and coworkers. I'm very proud of it. I'm very proud of the work that Steve Nison did on it. He's an absolutely outstanding A-class, top of the heap guy to learn how to trade from. And me too. I have no slouch either. I'm one of the top industry money show experts and stocks and commodities authors and real money trader. And between the two of us, we can really help you take your trading up to the next level. To use an overused quote, but that's the long and the short of it. Let our traders speak for us, and you know, don't take our word for it. Take the word of 100 people who ordered the system and are thrilled with it. I'd really be honored to work with all of you. I wanted to thank all of you for being here tonight. I'll stick around and answer questions. Hint: we may even do another couple of Amazon gift certificate giveaways, because that's how I roll. I'm just in that kind of a good mood. But Steve, I know you got to run. Any parting thoughts on this? I just wanted to thank you.
Yeah.
Yeah.
Yeah, sure. Again, this is, most of us want this valuable information ASAP, as soon as possible. And really, prior to this webcast today, the only way you would be able to get this information is through the mail. And, even if you send it very quickly, it would take days or if not weeks, especially overseas. But here, you'll be able to virtually instantly get this information and start using it, in the next day or next day or two's trading. And this is information that you'll be able to access time and time again. As I mentioned before, it's kind of like having a library, a virtual library on your computer. And, you want to know about setting protective stops, you just go to that section on the downloadable resource, and you click on, setting protective stops. And so, once again, this is the first time ever. We're really excited about it. We want to get this out to you as soon as possible, this resource, as a instantly available resource. So I'm real excited that Ken really took the time and effort, and it was really a laborious process to make it really crystal clear, to make it as easy to find any feature that you want, any strategy you want very easily, just as he was able to do on the DVDs. He was able to do on this downloadable resource. So thanks, Ken, for making this available to my group, and also, for those of you who know Ken from his website. So it's a great resource, first time ever. And the sooner you do this, the sooner you'll be getting ahead of the crowd by knowing when to get into those trades early and knowing when to get out early.
Yeah. No, thanks so much, Steve. I appreciate it. It's been, as always, almost 15 years now we've worked together. It's amazing how time flies. It's almost as long as I've been married to my wife. We've been working together professionally now over a decade, 14 years now. Our first seminar was back in Anaheim and then one in Denver, and then we've been working together ever since. So it's great to team up with you and put our heads together to really help the traders improve what they're doing. And I appreciate it. It's a heartfelt thanks, and a heartfelt thanks to all the traders for taking time out of their nights to be here with us. There's plenty to learn, and we're trying to pull out all the stops and give you lots of resources. I'll be around. It's not a wham bam thank you, we're out. I'll be around for a year and a half after you buy for you with webinars every 6, 7, 8 weeks, so you can bring your questions. It's a friendly learning environment. You can bring a trade that went south, and we can do a CSI trading, a post-mortem on, hey, Ken, why did they take a stop in that, Netflix trade or whatever? We can go through that together, and I can give you some insights and some pointers to help fine-tune your trading approach. And it's a fraction of, it's not, a $5,000 coaching program. It's only $695, no monthly fees, one time. It's a heck of a good deal, and it's something I would buy if I were not me offering it. So it's one of those irresistible deals. It'll go back up to the $10.95 on March 28th, but for now it's just $6.95. So hopefully we've made the case and earned your trust. We work, Steve's a completely scrupulous and honest person, which is rare to find in the trading education industry. He's one of the good guys, unlike most of the people out there. And I've earned the trust of so many thousands of people too. And it's really nice to team up together to help you folks with your trading. So we hope that this is a good, honest, authentic, well reviewed by the industry, peer reviewed, that you can make it as a trader, and we're here for you. So go ahead and order now. Just remember to click the apply button when you order. I see orders starting to come in already, so thanks to those who've been placing your orders. Click the apply button, and that'll drop it down to $6.95. So, Steve, thanks. You could take off if you want. I know you're busy. You got family. I'll stick around and answer any questions that people have for a bit, and wanted to thank you again for being here for all of our traders for the Stock Trading Success System official downloadable version launch, and a big shout out to Paul too for his suggestion that we do that. It took I've personally produced dozens and dozens of DVDs, but I know myself I like to buy things that are downloadable or streaming or whatnot, and so we're moving into the 21st century here, one step at a time, and giving you guys world-class resources that you can download and keep once you order the system. So go ahead and place your order now, and we'll be here for you for a year and I'll be here for you in a year and a half to answer questions after you order your system. So Steve Nison, thanks so much for being here. I really appreciate it, and thanks to
my pleasure. Right, and thank you so much for bringing this to our CalUngTrust.com family and the rest of the world.
Yeah, sure thing. Well, thanks so much. And folks, get your orders in. You don't have to do it right this second. The coupon code is SAVE, to answer your question, Richard. SAVE, which is, it's on the link here. When order, be sure to use the coupon code SAVE, S-A-V-E. Just type in, so click on order, type in SAVE, click apply. You'll see the price drop to $6.95, and then you can check out. You can use PayPal or Visa or MasterCard or whatever you want. It's all green. It's all good, and we're giving you, you know, hopefully at least a 3 to 4 times X return on your investment, because it's a very small price. So you just have to learn how to make a couple of winning trades like all these other traders have, and it'll be well worth your time. And it's a good way to earn your trust too, to be honest. The way that Steve and I have been in this business and relevant to the world's traders, I'm a big fan of authenticity and integrity and all that, having been a Fortune 500 guy before getting into trading back in the 80s and the 90s. We want to earn your trust, and acquiring your trust and working with you for many years, this is a good way to get that started, you know, by over-delivering a system that delivers a multiple of the modest investment in it. By doing that, hopefully we prove our value to you, and you want to stay with us in our other services in years and years to come. But it's a good, I won't call it a loss leader, but it's a really good, outstanding value with no monthly fees that you can get your teeth wet with and get ongoing training for a year and a half with me, as well as all the training from Steve. So, Steve, thanks so much for being here, and I'll let you and Paul take off if you want, or stick around if you want to. But I'll start answering trader questions because we got a lot of them. Thanks, everybody. Go ahead and answer the question, or go ahead and ask questions, traders, and I will go ahead and answer them. But Steve, thanks so much. I appreciate it. Okay,
No problem.
Okay, let me start fielding some of these questions because we've got quite a few. I want to get back to the charts too. I get antsy if I don't look at my charts. I'm a trader, so give me my charts. Here's a quick play. The bounce in crude, Carrizo, and a lot of the other oil service instruments like UWTI, really nice gap continuation. My single favorite chart, and see, this is a bonus for sticking around. I want to go back to the content. I'm not just a pitch guy. I want to give you guys actionable intel on how to actually potentially make a lot of money trading. The number one, if my life depended on it, strategy to use is minor gap continuations. And I know that Steve's favorite pattern is also called windows in candlestick parlance. This is just a sign that they're all a tizzy about it, kind of like an eBay bid. I buy a lot of antiques and Frank Sinatra tickets and silver coins and silver antiques on eBay a lot, and people get all a tizzy about stuff, and they're in a buying feeding frenzy. The tell, kind of like poker, I play hold'em tournaments in Vegas too. The tell is the minor gap, where you've got an imbalance of buy and sell pressure. So you got more buyers than there are shares available. It gaps it up. Completely ignore people who say, sell a gap up, it's going to go down. Usually gaps go up, and for proof, you need only look at the S&P, right? Look at broad markets for proof of concept. Gap up continues up, right? Or today, gap up continues up. Well, similarly, if you look at this chart, OUTR, a gap up. I didn't have time to cover this in my earlier presentation. The gap up continues up. A nice classic 45-degree angle breakout following a gap that led to a 15-day high. That's one thing I learned from Steve too, is this change in polarity concept, because it works brilliantly. Previous resistance became new support. Often, here's an extended bonus tip. The force is strong with this one. Oftentimes, previous resistance leads to the gap value, and I don't know why that is. I just care about making money, so I don't try and decipher the nuances of the force. I just try and make my money, throw off my trade at 37, sell to someone else at 39.40, and lather, rinse, repeat up at 42. But the point is, previous resistance often provides the opening range, not an open range breakout, but an OR gap, an open range gap value. And you can see, not quite a tweezer bottom here, but you see bullish lower shadow, and it's off to the races going up 3 points. So minor gaps that continue are the number one signature play that all swing and day traders need to master to make it. Again, I've done millions in trades. I know how to trade. I've traded north of 4 million in a single trading year. So I know how to, in order flow, and I know how to do this. One of the things that I want you to focus on is minor gap continuations or 2-day high breakout continuations, because often those will lead to great trading opportunities. Another strategy that I teach in the members-only webinars is what I call intraday swing trading. That's where maybe you put on a trade in the morning. Once you get an order fill, you put your stop right under support at the 2-day high, say 10, 20 cents down there, let it shake and bake, and then just arbitrarily close it out between 3:30 and 4. So if you're not keen on the wild and woolly open range 50 to 80 cent breakouts like I like to do oftentimes, you want to have a little more patience about an intraday trade. This is kind of what I call a 9 to 5 trade. I'm sure one of my competitors is going to rip that off too, but like they ripped off my university concepts. I am the most widely copied, well, Steve and I are two of the most widely copied guys in the industry. But like one of my colleagues on CNBC said, get over it. That's just the price of being well known. So I will. Anyway, minor gap continuations open for the swing trade. Maybe let it go for a few weeks or a few days or whatnot. You can tighten it into an intraday swing trade, get in and out during the same day, or for a nice quick open range breakout play for something that's moving especially strong in the current session also makes for another good play. So whatever your poison, you'll find good plays. Minor gaps that continue are the number one trading strategy that you should focus your energy on for the rest of your life as a trader. You have my word on it. You've seen my articles in Stocks and Commodities and my presentations for Money Show, and I'm pleased to have worked with so many tens of thousands of people who learn from me. Put that in your hip pocket. Put that in your pipe and smoke it. Always trade minor gap or window continuation plays, and then use the candle charts that Steve teaches you for things like when to lock in a profit. This is still all systems go. I don't see any reason to stick a fork in it. It's still nice open range large green candles to the upside, so to infinity and beyond. Here though, if I were long in CLR, I'd be a little nervous because we're getting right near the 200 moving average resistance. So I might tighten in a trailing stop to say 27.50, or even tighter using an intraday exit at 27.80. Okay, but for swing trades, always look for when it pokes its head above a moving average line. You should be ready to trade within that band of the highway. It's what I call kind of a highway approach. You're looking at three. I always get this question. They're simple moving averages, and I use eSignal. My favorite charting software. You got the 50, the 100, and the 200 moving average lines. You're looking at buying once it pierces that, sell into resistance there, and that's a very valid trading setup. I've done hundreds of trades with that. You're just trading. If you do trade pivots, wait for it to get above a major moving average line. Look to trade within that band of the highway, kind of like the edge of the highway and the dotted center line. In a fast and furious breakout here, sell into 34, then rebuy if it gets over 35, and you're off to the races. So look to gate your trades within those cycles, within the moving average bands. It's a very good professional strategy. The other one, as I mentioned earlier, is just a straight momentum play, 50 cents above the whole number high of a candle that's a wide range candle at the right side of a bullish cup. Often, this doesn't have great volume, but it is 5-day high, 6-day, actually 8-day high volume on the 4th. That led to a price spike of a couple of points in this instrument. So whatever you trade, there's a way to trade it more effectively. One of the keys is, you should look for hammers. Yeah, you should look for momentum, big, tall, green candles telling you, big honking candle, buyers in town. You might want to load the boat and watch it run up, in your favor. Because I'm in it to make as much money as I humanly can in my trades. I don't know about y'all, but whenever I do my Money Show appearances, I always ask, how many of you trade for money? Show of hands. And I get a little nervous laughter, and about 2/3 of the hands go up. If you're still losing as a trader, something's awfully wrong. You didn't listen to Steve. You didn't listen to me. If you listen to us, you potentially have much better odds of doing well as a trader. If you have to explain your trading losses or conceal your trading losses from your wife, you know who you are, or your husband, ladies, or whatever, your partner, as the case may be, or your pet chihuahua, whatever, if you conceal your trading losses from somebody close to you, then that's a sign of, I won't call it addiction, but it's just a sign of kind of failure, which you don't want to do. So what you want to do is learn how to replace your current trading strategies with what Steve and I teach you, and hopefully look for making bigger winning breakouts more often a way of life. See how selling into this would be the 100 MA line here. This is the signal. Here's a first hammer and a bullish engulfing y'all picked up on earlier. That's a first buy signal, off to the races. I'd be getting nervous right here because right under the 200 MA kept going up, so we're healthy, but we got a red candle. And one of the strategies I teach in the system is how to use the color of, say, two opposing candles. I don't see any here, but if you have two red candles following an uptrend or 2 green candles following a downtrend, that's a third tertiary type of momentum pivot signal. So you got one signal, a hammer. You got bullish engulfing, sign number 2. You got a third, which is a breakout above resistance with 2 green candles, 3. So you got 3 chances to get long before it ran on up, 10 points or 8 points. And then you know to sell into major moving average line resistances like that highway approach, then rebuy if it takes out new highs like it just did a few days ago. So having a sensible strategic approach makes sense. Okay, let's answer some questions here. Let's see, Richard was asking, can I have a preferred moving average for the tall candle to be on or on top of? The 50 and the 200 are the strongest. 50 for early entries, 200 for major support or resistance. The 100 is kind of a safety net or guideline, but yeah, that's a smart question. The 50 and the 200 are going to be the key decision-making criteria. So for example, here you can see the 50 tells us speculative bounce long possible. Not a really great trade yet, but it's starting to be of interest because it's held above the 50 moving average line for at least a sequential week. You know that whole pattern where if you get a big sell-off, dead cat bounce, and then it goes sideways. The longer it holds support, the more likely speculative buyers or short covering, nervous shorts may do a short squeeze and it may lift up. So that's the thinking behind this. That would be the first play. Second play above that with an exit target of 100, and that's the round trip of the trade. Say mid-20s, first exit 40 if it shows sign of slowdown, rebuy over the high, and then trade within that window. And that's a really good trade window opportunity. Now, you can better believe I'll come back on my YouTube channel and my industry articles showing P&L proof of how much I make in my trades like I was doing. I think one of the things that helps you is to understand with great clarity what makes sense to trade and what doesn't. So let's wrap up. Let's see, I've got a question. Hey, Karen asking, saying GDX into the day with a huge green candle. My thoughts. Well, green candles up are usually a good buy signal above the high, not at the high. That's a little choppy, but I like the green candle action. Personally, I'll likely go long at 21.50, right? 50 cents above the whole number high. We didn't see any particularly compelling evidence of reversal down here. We got a couple of bullish lower shadows, but that I don't know if that's a bullish engulfing or not. I'd have to ask Steve, but I know to trade when it recovers the 50 MA line. There's a lot of candle patterns that are sort of kind of, but not quite sure. I'd like to wait for bullish confirmation above moving averages. That would have made for a good trade, and still it's healthy up at new highs. Marcia's saying the quick and the dead, I like that. Yeah, I think it was a movie with Clint, but let's see, a question from Marcia about, is there any type of, let's see, I'm basically trying to trade on a shoestring or low fronts. Yeah, well, that's what I specialize in, is teaching traders around the world how to trade with small size, maybe 10, 20. The strategy that I use in my own real money trades is I will put on swing trades. I will buy about $500 worth of an instrument. And I like to trade maybe 4 or 5 different instruments. This is for swing trading. So that means maybe 20 shares of a $20 stock with a buy stop limit order. That gets me into the first trade. And I do these pilot trades. You may have seen my video on the Money Show channel about pilot trades, the interview I did with Tim Berkman back at Mandalay Bay 8 or 10 years ago. And I still trade that way because it works. I may put on a small, say $500 worth of the instrument trade. And you may want to adjust that to whatever numbers make sense, maybe $100 or $200 worth of the trade, let it mature, go up a few points for the ones that work out, and then start to snowball into the trade or leg into the trade. If it is what you don't want to do, the recipe for disaster, and I blew up 2 trading accounts back in the 90s learning this the hard way, the wrong way. I've made every mistake and then some, but I turned it around after many years of patient trial and error, and I figured it out. I'm a former corporate statistician and certified quality engineer from ASQC, and I'm a numbers guy, hardcore numbers guy for the Ford Motor Company back in the 90s, the early 90s, before I got into trading. What I found the hard way, because I'm stubborn and I got to learn everything the hard way. How many of you are stubborn and you got to learn things the hard way? Let's all raise our hands, because that's just how we're built, right? Especially if you're here in America. We're proud, and we're okay with being proud and wrong as long as we stand tall It's not how many times you fall down, it's how often you pick yourself back up, dust yourself off, and start all over again, as the song goes. Well, I learned the hard way. Start all trades off real small, real cheap, right? So may only be 10, 20, 30, 40, 50, 100 shares, real small share trades, small ball, then scale in once it proves itself. And the ones that don't, that's what small stops are for. So that protects your capital, and that's the number one objective as you learn, is to keep things small. So a small ball approach, and that's why I think my training's been so popular, is it's simple, it works, and it's inexpensive. What you don't want to do is, say, overtrade things like options or E-minis or penny stocks, because while the leverage is better, the risk is much higher. What I would much rather do if I were running a brick and mortar school and I had thousands of people go through as I do online, is I would teach you all how to master small share swing trading first. Maybe just $100 or $200 worth of an instrument, so you're not all nervous and worried about it. That makes sense, right? That's a refreshingly candid approach, because that works. Oh, and by the way, Marcia, here's another good example of just how good my pattern is. I just popped out to me here. It's a wide range candle at the right side of a bullish cup here. You wait till it gets over the 200 MA, you buy long somewhere in here, and you're off to the races and in the money. So those kind of patterns are what I specialize in. I'm a pattern swing trader and a pattern day trader. So good point. Oh, thanks, Deanna, saying she did well in a bull ETF play. Yeah, what I like to trade, I trade the XIV and the UVXY. So XIV is the way to play the market long. You get the best leverage. I don't know about y'all, but I don't like trading the spiders. It's $200 a share. Why would I trade that when for the low price of only 20 a share, a tenth the price, I get the same exact chart pattern. This is the VIX ETN, the long one, XIV. I like for day trades, I like UVXY. I trade that for intraday. And it's the exact opposite. So those are kind of an arbitrage play. You can play both sides of it, throw darts at both of them, and then scale out of the one that misbehaves and scale into the one that starts making money for you, right? Think like the movie Star Wars, A New Hope, Episode 4. I'm not in it for the princess, I'm in it for the money. I expect to get paid, said Han Solo. And if you want the Force to be strong with this one, what you want to do is figure out a way that makes money for you, even if you're wrong a lot of the time. And the right way that I found, at least, is start off all your trades really small. And no, you're not going to pay off your mortgage overnight with a 20 share trade, but you're also not going to blow up your dang trading account, and then I don't see you 5 years from now. As so many of you have been with me 10, 12, 15 years, because what I teach has the potential to work most of the time. Once you understand the simplicity and the strategy behind combining what Steve teaches with what I teach. So you're really getting the best of both worlds. I'm the breakout guy. I know one other really good breakout trader, Harry, but I'm one of the top breakout guys, and Steve's the great guy on pivots and breakouts and Western technicals with candlesticks. So combine the best of a very thoughtful, intelligent, strategic approach to make money in your trades. Let's see, Steve M is asking, what did today's candle on Nugget indicate? Well, let's pull it up. Let's see the daily on Nugget. Yet another one of our gold mining instruments. Dust is another one I'm looking at. It's similar to the one that the other trader had asked about with GDX. It's the same exact chart pattern. You'll find that GDX and Nugget, kind of the same chart, different prices. The inverse of that is to play dust, right? That's the bear on the gold. And it's got both a lot of risk and a lot of upside potential if it ever comes back to life. But for now, it's still a catch a falling knife. So that's why I'm keen on going long. I'm currently long Barrick is another one that I like to trade. ABX is another way to play gold to the long. And that's you can see why I'm long Barrick. That's the superior of all the gold mining stocks, right? ABX is much stronger technically. I mean, just look at it, all right? Very few red candles, good strong uptrend continuation. Such a well-mannered boy over here. We got a nice bullish cup, nice wide range candle parked above the 200 moving average, and that's a Schwang chart. Ken's World Party on Schwang. It ran from 9 to 15. I'm long and happy. I'm going to scale up into this. Okay. You could trade Nugget, but it costs a whole lot more and it's not as good a chart pattern, so why? This is one of the fine-tuning approaches you need to take as a trader, is understand the difference in superior chart strength. Okay, yeah, it's still worth taking a shot at highs, but why would I trade that? Kind of like when I go to a restaurant, I want to get a good ribeye with garlic mashed potatoes and grilled prawns and cheesecake and a glass of port. Making myself hungry here, but I always order the best thing on the menu. I always ask the server or the hostess if she's attractive. But what's the best thing on the menu? Don't hate the player, hate the game. You know, what's the best course on the menu? And then I usually order that because you figure they're the experts. They see the food all. That's kind of a good tip. And also, I learned this from Brian Tracy. Is kind of the rule of restaurants is they'll usually seat you at the worst seat next to the kitchen or the back of the house or right in front where all the people are. Say, excuse me, could I have that booth instead? Go ahead, be a minor pain in the butt. Ask for a better seat whenever you eat out at a restaurant. And I am going somewhere with this related to trading. Whenever you order something, always order one of the most expensive one or two things on the menu. It's worked for me the last 20 odd years. I live a good life, and I'm thankful to the industry and the traders and the markets for enabling that comfort level. But also, trade the best charts out there within a sector. One of the things that you'll learn once you order the stock trading success system, and this is absolutely valid today as it was a couple years ago when we filmed it, was sector. And by the way, in case you didn't know, you can click on this. I didn't have time to go over that. You can click on each of these to get, we have reality cam footage. You make the call with Steve. It's really neat. We put lots of work into this website. Even on a super fast server, it takes almost a minute to load, but it's packed with lots of good tips and strategy. Kind of like a Disneyland. You got to wait in line a little bit to get to the ride. This is an e-ticket ride. I like buying vintage ticket books from eBay sellers for Disney. I'm a huge fan of Disney, my #1 favorite company in the world, and until recently, my favorite stock I was trading, but it sold off a few months ago, so I'm cash. But anyway, one of the strategies that we cover here is sector-based trading, and one of the things that makes sense for sectors is all charts like gold miners are not created equal. You've got ABX, which I'm long in. You could be trading Nugget. You could be trading AEM, which is also a decent chart, right? That's a decent, little sketchy, but still reasonably good, strong uptrend chart, AEM. These are all gold charts that I trade, right? AEM, you know, there's JNUG, a little pricey now, but that's one that 76 a share. They're all gold miners, GDX. But how do you know which one is likely to be the big money shot? Here's the tip, a bonus for sticking around. The tip is, look at it, and if I were doing one of my live Saturday events where you could see my face on the webcam, I'd be illustrating this. Think of it like you're tying a piece of yarn or dental floss or whatnot, making as tight a channel as possible for price action. That's a superior chart, a nice 45-degree angle breakout with a nice cleanly defined chart. That's easier to trade because you have less severe pullbacks, right? You got a kind of bearish engulfing here to make me a little nervous, and a shooting star and a tweezer top, so I'd really be nervous here. And I'd likely close out the trade on a drop here and then rebuy up at new highs, right? But anyway, the point is, the cleaner the chart, kind of like an eye test. Which one is a tighter, cleaner, easier to make money with chart? I always look at a chart in terms of its profit potential. Kind of like on that great TV show Shark Tank. For that reason, I'm out. Dun, 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 dun. Because in Nugget, I'm not trading Nugget right now because it's choppy. It'd be a lot tougher for me to make money and keep tight stops in something that jumps all over the place. You know, bump, 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 bump. You're going to get stopped out. You're just going to get in trouble playing something that's fuzzy like a caterpillar. It's a nice uptrend, and yeah, technically it's in an uptrend, but it's a much superior chart to trade something like Barrick because it's nice and tight and clean. See the difference? That's how I make money trading, is trading the cleaner of the charts. I'm an expert at it, and I'd be honored to be able to teach all of you what I've learned, because it's really exciting to share the strategies and the insights of what works and what doesn't. And, you know, the neat thing is once you wrap your head around, kind of like that movie Matrix with Neo, you got to kind of look behind the obvious, kind of like the Wizard of Oz. Pay no attention to the man behind the curtain. I'm a big movie fan. I like Westerns and action movies, but I digress. Anyway, the point is, look for the cleanest breakout charts and trade them within a sector intelligently. Just like the pharmaceuticals and biotechs were strong last year, gold mining has been strong this last month and a half or two. That's why I've been calling it long for all my traders and my alert services. And oil is starting to bounce as of late. You know, like that WTI leveraged chart that is doing a rock star breakout so far. So kind of a long answer to the question, Steve, but I thought I would answer for you. I want to be able to build trust with y'all and give you authentic answers that actually work most of the time. So good stuff. Oh, thanks, Steve. That's fine. Good to see. Let me wrap up here in just a minute. Let's see. Deanna's asking, are they also available in DVD form? Not right now. No, I don't think any longer, because it cost us almost $200 wholesale just to get them manufactured and shipped. So we'd rather just pass along the savings to you guys and give you the download versions. Where you have to do is log in and download the segments, one at a time. It may take a bit of time to download them, but we give you access to do that. So, and thanks, Graham. Appreciate that. Marcia's saying, wish this was available years ago. I invested thousands in other people's stuff. Okay, thanks. From Susan, thank you. Will we get an opportunity to rewatch this great educational video? Yeah, I will get I'll try and get this video up to, I never use the word try. Like Yoda said, do or do not. There is no try, just get it done. All right, I'm an action-oriented kind of guy. You'll find the most successful people who've made millions in sales and millions in trades are action-oriented and intense action, specific metrics, and action focus. I will get the video uploaded to my YouTube channel later tonight, and it'll be on the top of the StockTradingSuccess.com website come tomorrow morning at the latest. So watch for it there. But yeah, we will get it up there for you guys. And right, from Mike, I do use a 15-day 15-minute candlestick chart. All right, Susan, it will be available at the top of the website. Hey, thanks, Marcia. Appreciate it. Glad to hear. A good question, a smart question from Karen is asking, once a stock has gone beyond the 50, 200, and 200 MAs, how do you take it? How do you trade it from there? What I don't do is look at the yearly charts, because I've missed a lot of good trading opportunities worrying about the 52-week high resistance. If something's like this, these are my favorite charts, like PGR, nice big green candle here, right? This is kind of in this micro downtrend, a bullish engulfing reversal. We got a bullish cut breakout here on decent volume. I will use the price extension method, and I can teach you how to do that in the upcoming members webinar, but basically you look at the 90-day chart, you cut it in two in terms of the price range. So 29 to 34, about 5 points is all. That's not a great range for a 90-day chart, but about 5 points. So if I buy long at 34.50, my exit target would be up near, what is that, say 37 or so, 2.5, 3 points or so. So use roughly 50%, a 50% kind of the thinking of 50% retracement, but a price projection on top of the trading range makes for a good breakout signal. And the same thing's true for a swing trading chart here, like 31 to 34. That's why I like charts with wider ranges. Let's say we've got 16 to 21 at a 5-point range, so maybe a 2.5 up to 3 points price projected exit would put us out at, say, 24. Now, don't exit the trade just because it hit my target, but I will tighten up my stop, to within $1 or so of the current low, just to lock in a profit before the market takes it back. Like Stephen mentioned, the markets will certainly take your open profit back if you give them a chance most of the time. So you want to be in and out with money. Hey, Charles, the largest recent share size, or I should say recent, the largest earlier share size I put on was that 2,000 share trade in MGM for the overnight hold that I made almost $3,000 in, okay? And that kind of doesn't mean much without proof, so I'm eager to show proof. That's right here. So it's 2,000 shares. I bought 2 lots, 2,000 share lots of MGM stock at 10, sold at just under 13 on the opening bell. It was an overnight gap up in my favor. And the reason I sold the gap up to lock in a $3,000 profit in that real money trade was because the gap up started to fade and drop. And that's one of my best winning strategies I teach you in the system and in the ongoing coaching webinars, is if you're in a series of, say, 5 or 6 swing trades, there's a rally on Wall Street and things gap up, but then it starts to drop, often that's a good profit-taking time. either right on the opening bell or later that day. But that's my biggest trade that I've done in recent history, was the 2,000 shares of MGM selling for a $3,000 profit. So I took a total of 3,700 that day. I wasn't just trading MGM, but that was my biggest win. So around 3,000. That's why I'm still in the trading education industry too. I mean, most traders are happy if they can have a $3,000 day, but I'm not a guy who makes, $1 million in 2 months trading or anything like that. I'm the specialist in the small size, conservative, grind it out type of swing trading and intraday trades. But I like to walk before I can run, and I've kind of plateaued there. I couldn't sleep a wink hardly that night. I remember it was very hard for me to sleep with it was nearly $30,000 on the line, $22,000, I think, 1,000 shares at 10. So that's roughly 20 grand on the line of stock that I was in overnight, and I couldn't sleep. So for that reason, I'm out. I'm trading large size most of the time. I prefer to keep things small and safe. So if that makes sense, that's a good strategy. A question from Heidi, would I still enter ABX here? Yeah, I'm going to keep buying into it. As long as it keeps going up, I'll buy it. When it stops going up, I'll stop buying it. A good question from BC. When China was bad, mining was down. Now China's still bad, but mining's up. What's my thought on it? I don't listen to news. I have not watched commercial television in almost 18 years, and I'm very wealthy. So do the math. As long as something goes up, I buy. I don't care about the news. I don't care about the fundamentals. I'm one of those classic, day traders like Alan Greenspan had said, mystic symbols. They just care about momentum and the numbers and making money. They don't care about the fundamentals. They don't care about the PE ratio. We don't care about the earnings. Certainly don't care about the broker ratings. All I care about is, can I buy from someone at 15.50 and sell to someone else up at 17 or 18 and make a few $100? That's as far as I'm thinking. I'm looking at it for a swing trading profit. So I have no idea what the situation in China or politics or any of that stuff. I'm just a pure price action trader. So I just care about taking money. That's me. I'm very upfront about that. I'm a serial trader, serial entrepreneur, serial trader. So as long as there's money to be made, I'll rebuy new highs. Always rebuy new highs, scale out at the first sign of a pivot, which is where the candles come in so helpful. And yeah, Marcia, yeah, I stick with the 50, 100, and 200 only on the 90-day chart. I don't use those. A question from Steve. How about writing a book about all these strategies? Well, I got multiple offers from, who was it? I forgot the name of the publishing company. They're the number one in the trading, Wiley. Yeah, Wiley had made offers to me about writing a book, but I'd rather produce video because it's more timely. Once you write something down, it's kind of instantly obsolete. With the exception of Steve's books. I like Steve's Beyond Candlesticks. Is my favorite trading book. That and The Stock Trader by Tony Oz. And Chart Patterns for Day Traders by Barry Rudd is good. And Tony Turner's The Beginner's Guide to Day Trading Online. Just a small handful of books. All right, what else? Harry Boxer's book is great too. A question from Jim. I had a problem entering the webinar and missed a lot. Please provide info on how to place the order. Absolutely. All you got to do is go to stocktradingsuccess.com. There's the coupon page. And the order link is at the bottom. To place the order, just type in the word save and click apply, and that'll knock the price down to the $6.95. So go to Stock Trading Success. I even wrote up here, please allow 20 seconds for the site to fully load. Watch some of the preview videos. Take a look around. It's kind of like exploring going to the Disneyland of stock trading. You could see all these FAQs, why you should order, what kind of trader will benefit most, lots of bonuses. We got all kinds of stuff here to help you learn more about it. It's the biggest epic stock trading system site in the entire trading industry. You will not find a more comprehensive kick butt trading system site anywhere in the whole industry. I mean, name one. All right, there isn't one. We put several hundred hours of work into programming this. Thank you very much. So because we believe in it, and we have so many traders that have found value in it, that makes it all worthwhile for me, is seeing all the video testimonials and the comments from everybody for whom this really made a huge difference. And I really appreciate it. And if any of you are out there Many of you, I'm sure, are. Thank you very much for writing in your success stories. I really appreciate it. Lots of video testimonials. Anyway, to order, you just scroll all the way down to the bottom, add to cart, and then once you get to the order, type in the word save, because you want to save money, right? Type in save, click the apply button, and that'll knock your price all the way down to $6.95. Do not check out unless you see the $6.95 price. Do not just type in save and click checkout, because it'll still be at the $10.95 price. Type in save, click apply. This is why I made this infographic for you guys. Once you click apply, you will then see your discount reflected, and then when you check out, you'll get the discounted price. So really easy. Just type in save, click apply, click checkout, and you're good to go. And that's at stocktradingsuccess.com. Oh, thanks. Shachar saying great education. Yeah, I'm here for you guys. I want y'all to make money trading. That's, it's in our shared interest, right? And Steve and my shared interest to help you folks not blow up your trading accounts, not lose money, but actually do well in your trades. If we can keep you alive in the industry by making money and avoiding mistakes, then you're likely to be customers of ours for many years, which many of you are. And we count on that, right? It's as any good business knows, it's not about the first sale, it's about the repeat business. And that's why I have so many repeat customers. I think I'm over like 78% repeat customers. So the huge number of people that retain and rebuy and order my new things and all that. And I'm sure Steve is also stellar numbers in retention, because what we teach actually helps people. So we're here for you guys. So anyway, that's the offer. Let's see, any other questions? Hey, Lisa's saying, I haven't followed through yet on my resolution to trade bigger size. You're right. Have not done that. I just can't sleep at night if I got 20 grand in a trade riding. I don't know about y'all, but to me, 20,000 is a lot of money. I don't mind trading 20,000 worth of 10 different trades. Okay, that's fine. I do that, but I don't like 20 or 30 grand riding on a single trade. So I like to, because what if it gaps against me, right? I always worry. If y'all are like me, I worry too much, and it's not paranoia if they're really out to get you, right? So I like to play my trade safe and smart and secure and keep my size small on the front end. Once I have some P&L, I'm playing with the house's money, then I can start adding some chips to the pot and start hammering away. But I want to play it safe on the front end, and that makes sense. Oh, hey, a question from Joe about sometimes stop will take more than you want. What if something moves under a stop on a market maker down spike? Can you go over that in the live room? Yeah, sure thing. Sure thing, Joe. You can do that. A good point from Charles about position sizing and scaling. Well, thanks, Shachar, about the books. All right, Lise. And thanks, Heidi. Okay. Well, thanks, everybody, for being here. From BC, do I separate trading from long-term investing? Yeah, I do kind of active long-term trading, like the bounce in crude and a potential bounce in the inverse ETFs. Those are my two big counter trend plays. The oil's starting to work out, the inverse ETFs not yet, and I do trade those, but in different trading accounts. So I'll trade the long-term, either say 4 to 6 month or longer. Rarer that I do that, but that would be in, say, my Fidelity SEP. So that's a longer-term swing trade. Shorter-term swings, like a week or two, I do those in both my Fidelity and my Interactive Brokers, and day trading I just do in my IB account because it's only $1 commission. So anyway, good stuff. Thank you so much for being here, and thanks, Paul, for sticking around too. Wanted to thank all of you for joining Steve and I. Really pleased to give you a good, no BS, honest training and stuff that actually has a good potential. Wanted to thank all of you for ordering. I see all these orders coming in. Please give me at least 24 hours, or I'll try and get all the orders done tomorrow morning, but give us 24 hours to get your login and password set up for you. We have a lot of new folks, it looks like, on the emails here. I see all the new orders coming in. We have to manually set those up for you in the security system. So give us 24 hours. Don't order and then 5 minutes later send me an email, Ken, where's my login? It's not one of those kind of sites. It's a professional site. So we have to manually set up your login and password, and so give it some time. Yeah, give me 24 hours and I'll get you taken care of. So thanks so much for being here. It's a real honor to have been working with Steve almost 15 years now. Quite the long working relationship, and great to work with all you folks as well. So I hope we've made the case. I hope that, judge me, look at my authenticity, the integrity, the reputation. be skeptic of everybody in the trading industry unless they've been around for a long time and have proof they trade. Make sure that you're doing well, and hopefully you'll make it as a trader. So, this is the best way I know to start focusing on your own personal success turnaround plan when it comes to trading the equity and ETF markets. And again, you can apply, as a good point from a colleague had said, you can likely apply this to international markets as well, maybe with a little bit of work, but the candles are definitely applicable across markets. And much of what I teach is also, whether it's in different countries' markets. I don't know about, say, UK spread betting or the Aussie market, but whatever markets you trade, as long as there are patterns that move, you can take a look at the patterns I taught you tonight, and they should help out in addition to our U.S. equity markets. So anyway, I'm Ken Calhoun, Trade Mastery and Day Trading University, and many other sites. I wanted to thank you all so much for being here. Y'all have been amazingly patient. I appreciate it, and I'll see you guys next time.